And Mine Crypto here. I hope we're all having a wonderful day. Please remember, I'm not a financial advisor, and none of this is financial advice, and none of the information provided in this video should ever be seen as a signal to buy or to sell. Please subscribe, please hit that notification bell so that you don't miss any further videos. But first and foremost, we look at these crypto bubbles, and we are seeing the deep Red Sea right now. Everything is pretty much down. Is this manipulated? Is this just a normal capitulation? What I'm doing is I'm buying. Now, we're seeing Quant up one rank to 69 with a market cap of $1.4 billion, with a 24-hour volume of $52 million, with a quant value of $116. Wow. And we see this from Bullshark Trading. If EMAs do not hold, expect Quant to become the $100 stablecoin once again and look to the absorption area to hold as support. Are we bothered? No, this is short term. Exactly. And as we can see, this sell side liquidity down here at around about 100. I'm not that bothered because this short term action really does not faze me in the slightest. Because if we look here, and we look at this, we see the bull, we see the bear, and then we see this accumulation range. And this accumulation range can run down to $80. Not that I'm saying it will do, because I think we sit around here, this line here, around about $100. There's a lot of support around here. We've still got a bit of a way before we get out of this box into some form of disbelief. But again, I'm not here for the short term. And we are seeing we're slightly oversold on the RSI here, the stock RSI. But we see this morning. This particular wallet that I've been tracking over the last 5 days has transacted 4,246 quant. CB to private wallet this morning of 1,737 quant, taking advantage of these lower prices. A value of $216,000. The total wallet holding, as I've just said, is 4,246. I'll be keeping an eye on this one. And we go over to Arkham Intelligence. Now, as I've said before, I've noticed some very strange going-ons, but maybe not strange, but just going-ons with regards to market makers. I personally think Wintermute is playing a game here, controlling the price as market makers do, and in return lets potential license buyers or whatever those wallets are doing to accumulate without too much worry or liquidity slippage. Obviously, Quant is quite a liquid token at this point, but when these guys are withdrawing nearly $300,000 worth of transactions, there needs to be some more liquidity, and that's where I think this Wintermute wallet is coming in. So we can see this. I fully expect another transaction at some point today. So we see Wintermute to private wallet back into Coinbase, and then hopefully this will spit out on the other side into another private wallet that I report on. So this is looking very, very interesting. When I see this type of action, I often see maybe a couple of hours later or a day later, see a transaction outflow from Coinbase to one of these private wallets. Talking about what's going on with the news and Quant, I see this from Sand. The last time Quant was posting pieces about CBDC, digital pound, we learned that they were doing trials for a long time. Same is happening here with the digital euro. We all know they are involved, and a matter of time till it gets confirmed. So we see this from the Quant network. An update from Gilbert. He says, on the 14th of February 2024, the EU's Parliamentary Committee on Economic Monetary Affairs held a meeting to discuss the digital euro. An updated draft of the digital euro legislation revealed several key changes. Piero Cipollone, member of the ECB's executive board, was explicit in the commitment to preserve everyone's freedom to use of public means of payment anywhere in the euro area, even as payments go digital. Addressing concerns around bank disintermediation, despite concerns commercial banks needn't worry about consumers withdrawing deposits to hold digital euro instead, because it's been designed as a means of payment, not investment. The introduction of this new currency is designed to complement cash with a digital option for paying with central bank money. Similarly, while questions around the need for holding fees are somewhat valid, the digital euro is still very much exploratory phase. This is why important that bank trials this technology first. By implementing certain parameters, the ECB can get a better understanding of how a digital euro would work in real life setting before it's rolled out to customers. The central bank has also discussed implementing deposits limits and precautionary measure to help address concerns from banks relating to contagion or risk to other parts of the system. By taking this approach, the ECB can ensure it understands what it means for the end user. However, while it's reassuring to hear that the ECB is committed to preserving the role of the share of central bank money in payments, it's equally important to clarify that the introduction of this new form of money will not alter how banks operate, hence safeguards included in the design of the digital euro. Permissionless blockchains. The concept of an internet for money has a potential to transform the financial services industry. It consists of a combination of interoperable, permissionless blockchains that allow both people and institutions to safely transact on public networks whilst maintaining privacy and confidentiality. For banks, transacting on these new large-scale networks can enable them to gain greater distribution, payments, acceptance, and settlement options. Until now, public blockchains were typically used for cryptocurrency. Increasingly, though, central banks are enabling businesses to run payments on public blockchains, and if engineered correctly, they can have a greater resilience due to widespread distribution. The shift towards permissionless blockchain is a positive evolution in the maturity of blockchain. We're now seeing the acceptance of broader networks being used, which, if combined with the right technology, provide access to greater networks that offer more users, distribution, and liquidity. The need for privacy, arguably the most important design feature of the digital euro, privacy continues to remain a topic of discussion. However, ECB has confirmed that it is working on implementing state-of-the-art security measures to ensure privacy protection. The central bank has also stated that consumers will be able to use digital euro offline, offering cash-like privacy to users where personal transaction details would only be known to the payer and the payee. While a certain level of apprehension around this new form of money will be expected, we must remind ourselves that this is often the case whenever we experience significant change. If we cast our minds back to when bank cards were first introduced, we witnessed similar hesitation then too. This may mean initially acceptance of the digital euro is gradual, but regardless, it's crucial that the ECB continue to uphold the highest levels of privacy throughout the future stages of development if they want to gain consumer trust and encourage widespread adoption. We also see this tackling fraud. The digital euro presents an opportunity to use new tools and technologies that can help tackle the ongoing challenge of fraud. If the ECB wants to maintain trust in the digital euro, it must prioritize effective fraud detection and prevention. This is because if the bank can effectively demonstrate the capabilities of the digital euro and its ability to protect users from fraudulent activities, it can strengthen its reputation. So what's next for the digital euro? And as the ECB progresses in developing a digital euro, it will continue to iterate design elements, address concerns, and optimize benefits. We look forward to seeing how the digital euro continues to evolve, as it provides a unique opportunity for commercial banks, enabling them to launch new innovative products, address new use cases, and extend their scope beyond domestic markets. And as we know, our man, Dr. Luke Riley, is at Navigating Change today in London, where we've seen the ECB executive pens November 2025 rollout for digital euro CBDC. So the attendees there were the European Blockchain Association, INATBA, the International Association for Trusted Blockchain Applications, and we can see this, Dr. Luke Riley, and we got the Ricardo Simones, the Executive Director of INATBA. So all looking very, very interesting, especially with regards to the ECB and what Quant is doing with innovation within the fintech industry. So please remember to subscribe, hit that notification bell. All the best, and I'll catch you later.